Welcome back. You're watching Taxing Times. If there is likely to be no change in the headline rates of taxation, direct tax that is, then what growth levers or growth buttons can the finance minister push through tax policy to help industry try and achieve stronger growth this year? Ajay, there are several issues sector-wise if one was to go to, several sectors asking for special SOPs, incentives, a continuation of the export incentives that the IT industry has been asking for, or a change in the, or an extension of the incentives for power projects. What do you expect will likely be the big changes that he can make without disturbing headline rates and help sort of industry which is struggling with higher input costs, inflation, and maybe even lower demand this year?
I think nothing much on the direct tax front, frankly, for the simple reason that the structure is already in place in terms of direct taxes, and the going forward position is also on the table in terms of the DTC.
Then let me come to the issue of exemptions. I think there are some expectations or demands at least for the extension of the export incentives that we have for a year. Assuming DTC becomes effective next year. I think there are similar expectations with regards to power projects where the exemption expires this year and people are saying, can you extend it up to April 1st, 2012? So do you think those are realistic expectations?
I would absolutely think so. There is a case for doing, otherwise for this 1 year, the projects executed in this 1 year will lose out the exemption forever.
Right.
And so clearly there is a case whether, as Muthu said, whether it's a profit-based incentive or an investment-based incentive, certainly for power project which is ending on March 11. When the DTC was coming into force on March 11, there was a consistency. Now there is a 1 year gap. And the other thing that you mentioned about infrastructure, which is I think a need of the hour, and over the next 3 to 5 years there would be huge amount of money, close to maybe $500 billion or whatever that number could be is going to be spent. And there was this tax exemption for investing in an infrastructure project. So if you had an external commercial borrowings and you paid interest out of that, there was an exemption many years back, which was withdrawn at some point of time. And I would believe there is a case for reinstating that. This will really also augment the the funding aspect that the government will go through, as you were saying. How do you generate the funds? And this could be one way of doing it. So whether a complete exemption or currently the withholding tax on interest is 20%, reduce it to 10%, reduce to 10%, and increase the tenor of the bond for say maybe more than 10 years, something like that. But certainly, I think something of that sort. Would encourage, because a lot of funding is going to come from foreign investors.
Okay, what's the case with MAT, Ajay? I know that that's one request that's on the table and has been represented to the finance minister. What do you hope will change? Do you really think it will?
Menka, the chamber has all along been representing, and actually it's worked the other way. Based on inputs from the industry, we have, firstly, why did we have MAT? We had MAT to bring to tax certain companies who were not paying tax, zero tax. But look at the way it's progressed. We started off with a minimum tax of 7.5%. That was at a time when the taxes used to be somewhat higher. We are, on the profit tax front down to 33% now. But the way MAT has progressed, it's moved from 7.5 to way up to close to 20% now.
I think the DTC proposes 20%.
Yes,
it's currently at 18.5 or 19.
Plus surcharge takes it up to pretty
almost
much close
same,
to 20%. Now with MAT at 20% and your normal tax at 30-odd%,
right.
I mean, where is the, can you really call it a minimum tax when you're trying to recover 20% of the earnings?
No, so it's a maximum alternate levy, yes.
The two reasons why MAT came into play was because of the difference in book profits and the tax profits.
Right.
Which was largely on account of tax incentives and the depreciation differences.
Absolutely. Incentives
we know are going away. Your depreciation differences have come down largely because the plant and machinery rates, the general rate is down from 33% to 25% to now 15%. So the difference is disappearing, and therefore the whole thing of there being a zero tax company looks, you could have initial years losses, etc., and therefore you could still have a MAT situation arising. But certainly the rate at 20% seems high, and therefore our request was that you link it to the corporate tax rate. So if the corporate tax rate is 30%,
right.
You could probably on the higher side or maximum have it at 50% of the rate, so that it's self-calibrated. The moment the rate changes, your MAT rate also comes down, and there's no further interference required.
So is that something you expect he will address this year? Because I know this has been a pending demand for a while,
yes.
Exacerbated by the fact that the DTC proposed 20%.
Absolutely. Now, given that only last year they took it up from 15 to 18%, it would be
bring
too
it
much of a
back.
flip-flop for them to
Bring it back down this year, right?
Yeah.
Is this a big issue there? Because, if incentives are going to fall off when the DTC becomes effective, really how many companies continue to be then in the MAT net and for how long? And hence, should the FM be spending a large amount of his time thinking about what to do with MAT?
I think I don't think so. Maybe 18 may remain as 18 or it might go to 20, but nothing more than that.
Muthu, you have a different opinion on this, or should I
No,
move on to the dividend distribution tax issue?
Sure. No, I don't have a different view. I think it's, as you rightly said, it's probably not an issue that requires a lot of attention.
So can we come back to then the other oft-repeated issue of dividend distribution tax and the constant allegation that this is a double tax on companies? Please do something to deal with it.
I hope he addresses. As I said, there is a case as to why you will have chain of companies in India. I mean, these are nothing to do with taxation.
Right.
These are business exigencies. You may have it for the reasons on financing. You may have it for the reasons of joint ventureship, for projects being in a separate companies. So the chain of companies by itself is a requirement and has been a requirement for a long time. So there is a strong case why we should probably adapt a structure where, some time ago we used to have this ATM concept where as long as you pay the dividend in the same year, it keeps getting exempted under the fundamental principle that we don't want to tax the same income more than once.
Right.
So I think there is a strong case for that to actually come back.
What do you expect?
I would say some moderation on the
Rates.
dividend tax rate.
How much would you like it lowered by?
I think it should be taken back in steps to 10%, which is where we started.
It's currently at 16, 15?
Currently at 16.6 with the surcharge.
So take it back to 10%.
10%. You see, when it was introduced, it was supposed to be a simpler method of collecting tax on dividends. So instead of taxing numerous shareholders on small amounts,
Right.
10% was taken to be a revenue neutral rate where it's the government thought that it's simpler to pick up that money from the companies and let us not chase the small shareholders. If that indeed was the philosophy, and if 10% was supposed to be the revenue neutral rate, then there is absolutely no reason why it should have been taken up all the way to 16.6.
Okay. So do you think it will come down to 10% there? And add to that, I think the other demand that you all want, which is to do away with the tax on foreign dividends, right?
So I would believe reducing from 15 to 10 looks unlikely, and this is a South African model that was followed in 1997 when the DTT was changed from a shareholder base to a company base,
Right.
and that has continued over the last 13 years, and that seems to be the case even going forward. So I don't know whether, or I don't think that he can reduce it from 15 back to 10. That would be, I think, maybe a massive kind of a tax erosion in that
So
sense.
he's already negated two
Yeah.
demands, right? Both on MAT and
But
on DDT. I think Uday is saying it's not
looks
going to
unlikely,
happen. Right?
unlikely. Certainly on the foreign dividends, as an example, there is a case to make it, and this has been said in the past also. So for Indian companies going global, if you have a foreign subsidiary which declares dividends and pays it back to the Indian parent,
Right.
right? Whereas in the Indian case, the tax would have been 15% or 16% including surcharge. In case of foreign dividend, you pay a normal tax because that the taxation is still on the shareholder. And you pay a full rate of 30 or 33% including that. And there is clearly a case to equalize with the DDT rate,
Okay.
whether it is 15 or
10,
if
which is
that becomes
unlikely,
10.
but 15,
Yes.
16. Yes.
yeah, I would say it would be 15.
So gentlemen, I think when we talk about trying to, a tax policy that helps stimulate growth, the only thing we've actually come down to, which you believe is realistically possible, is a one-year extension of the profit-linked incentives and a one-year extension maybe of the investment-linked incentives for the power sector. And whilst we want MAT and DDT to change, Uday tells us it's unrealistic to expect that to happen. So nothing else will happen when it comes to stimulating growth. Is that right?
Yeah, from the point of view of stimulating growth, probably you're right. But the purpose of budget and taxation focus is also on administrative issues in a budget. So a lot could be done with respect
For
to
instance?
that. I'll quote an example. There is this withholding tax issue.
Okay.
Until about 2002, if I remember right, there was an exemption on withholding tax with respect to interest paid on foreign borrowings or external commercial borrowings.
Right.
Today, realistically, we as borrowers in the corporates are never able to get the ultimate credit for these withholding tax, and it ends up being grossed up and we end up actually paying interest as well as the withholding tax on those interests. For some reasons, practical and administrative, we are not able to get the credit for it. So it will be useful if actually government, for example, addresses this issue.
Unfortunately, it's not the headline making part of the budget. It's not what gets channels like us excited, though it does impact your day-to-day life. On that, we're going to take a quick break. When we come back, we will talk about the potential of one big headline coming out of this budget. I hate to say it, at one time it was a 4-letter word, and for the last 2 years we've been talking about an amnesty scheme. We'll come back and discuss if there's any likely potential of that happening this year.